I want to start off and talk about three things today. First, I want to talk about the beautiful double top in gold that I observed last Friday and called to everybody on Twitter. Second, I want to talk about how I was a little bit wrong in the euro, but we now have a key reversal up day. And third, I want to talk about the low that was observed in the S&P today. First, let's look at gold. I screamed to everybody on my Twitter, there's a double top in gold right at 1250. It's beautiful. Short this fucking thing. I called it Friday afternoon on my Twitter. If you're not following me, follow me. Twitter.com/PMTCM. Or follow my Twitter feed on the website at PMTCM.com. So let's look at gold. This is a 30-minute chart of the continuous futures contract. Here we have the beautiful double top. The swing down, follow through, takes out the low between the two tops, which confirms the double top. Then we have a beautiful Fibonacci retracement to the 78.6. I mean, perfect. The exact high of that 30-minute bar is 1242.8, and the exact high calculation of the 78.6 is 1242.8. So you sell the double top, you sell the retracement, and you sell the breakdown to new lows when it breaks out this red line. That is a swing signal to short. The trend is now down. Now, we had a deep retracement greater than 50%, so what does that mean? Our projection is going to be a deep one as well. It means that although the 100% held for, I don't know, an hour, the 127.2 held for about 3 hours, again, to the ticks, we're now at the 161.8. Sure, you could lighten up on a position here because now we have a deep projection, but the more likely scenario is the deepest projection of 1158.7, which is the 261.8% projection, which a 100-point move in gold is nothing. We're falling through nicely 3 days later. So you should be fully loaded, triple position. Maybe you took half off here today and stops at break even looking for another 40-point move. Beautiful trade in gold. Everybody and their mother should have taken it. I don't know why you wouldn't have. All right, moving on to the euro. I thought this 12.5% projection wasn't going to hold. I thought this low was legitimate in the euro and we were going to go to new highs. I was commenting on my blog and on Twitter that this was a triangle forming. And as soon as the triangle broke to the upside here and the swing activated, I thought, hey, we're going. But this little fucking 25% retracement, which is a minor retracement, by the way, held the euro. I mean, it just collapsed. If we zoom into a 10-minute chart, the only indication we had to sell the euro was this swing, and it was minor. There wasn't even a deep retracement back up to give us a legitimate swing down. Now, sometimes when there's a shallow retracement, I mean that you better bail. So I did bail. I bailed around here. I bought in at this double bottom here, so I didn't lose anything, but I gave up a lot of profit. So what happens? We take out a new low, okay? You sell the new low or you sell the retest. The euro does that so many times. It's so beautiful. You get another chance to sell it. Then we have this funky bar, which sets up a double top indication. Now, I would argue that this could be a double bottom, but it's not as clean as I like, so you could get long on that bar. But more realistically, and what I've done, is got long off the double top failure, because that's what's set up. So once we break right over 122.35, and again we get a nice retest of that on this huge pop bar, bam, buy it. So we buy it here, and now we buy it at a break to new highs through yesterday's high, because that means it's a key reversal up day. Now, I don't think the euro is going to take out new highs or go up to 150. I think maybe 128 to 131 is a good level where we can find this thing start selling off again, because ultimately I think the euro is going to fail this time. So lastly, I want to look at the SPY ETF as well as the S&P 500 futures contracts. Here's a daily chart. This is a daily chart of the SPY. I put this chart on my blog 2 days ago. This is called a measured move, when you calculate this time and price of a previous move down and interlay it onto a new chart. I did that here with the SPY, and that is how I was able to calculate Monday's low. It came in within 13 cents of this measured move down. This move down was 13 days. This move down was 15 days, but I neglected the bad data of the crash and recovery period. So that gave me an indication that this correction was over. However, we rallied up one strong day, had key reversal day down, stopped dead at the 200-day moving average. Now I want to look at the S&P futures on a daily chart. Their measured move down was slightly different and was longer in time. So if I quickly draw the measured move down, you see that we get a longer projection in time, and the closing value was exactly today's close. Okay? Couple that with the 61.8, which arguably has some tolerance because this low at 10.58 on the crash day, nobody knows if that's the real low. That's just what's recorded right now. It could have been a little lower, which means that the 61.8 gets stretched down. You know, with the crash day being so large that you have to give a lot more tolerance to the 61.8 than you usually do. So I gave it a 4-point tolerance because of how strong it is today, and coupling that with the 200-day moving average coming in right here at 1099.82 on the daily chart, which I don't use but most people look at. Boom, there's our low. So Terry Laundrie was calling for some type of momentum shift to occur on May 20th. He thought it would be a high. I think it's going to be a low here. We have the same measured price move in the S&P futures. We have a bounce off the 200-day. I'm looking for a retest down today of maybe a 50% to 61.8% of the today's range before breaking to new highs. And I believe that if we do end up taking out this high before taking out this low, we're off to the races to new highs on the year. Terry Laundrie's looking at the June 20th period for some time predictions to come true. Maybe that'll be a high and this thing's going to crash all summer long. I'm not sure. June 20th is also a Gann seasonal date. A lot of trend changes happen on change of seasons, people. Go read How to Make Profits in Commodities, W.D. Gann's book. It's all the secrets of the universe right there. That being said, I hope everybody learned something. You should have shorted gold. You should be long the euro. Should be long the S&P. Again, this is all for educational purposes only. I'm out. Go subscribe to me on Twitter if you're not, and spread the word. I'd appreciate it.